The end of an era. China's currency dominance over the US dollar, the Chinese yuan, has left the US dollar behind to emerge as the most traded currency in Russia. Malaysia and Beijing are ready to hold talks to reduce reliance on the greenback. But can the Chinese currency end the global dominance of the US dollar? Here in this video, we are going to show you some facts by which you will understand how China is getting the leading power over the US dollar and ending its dominance over the world. China's economy has been immensely successful by most measures. Its gross domestic product (GDP) of $17.7 trillion is second only to the United States. It's also the third largest trading nation in the world behind only the US and EU. However, China's currency, the renminbi, only accounts for 3% of global trade. Compare that to the 87% market share of the US dollar. Achieving reserve currency status isn't a formal process. Instead, it's like winning a popularity contest. The most popular currency for global trade and cross-border commerce emerges as the de facto reserve currency. The popularity of a currency is simply based on the perception of security and resilience of the issuing country. This is the asset or currency that most central banks across the world prefer to hold in reserve, which is why the dominant asset earns the label of reserve currency. Since 1450, there have been 6 major reserve currency periods. Portugal dominated the global reserves until 1530, when Spain became stronger. Currencies issued by the Netherlands and France dominated world trade for much of the 17th and 18th centuries. But the emergence of the British Empire made the pound sterling the reserve currency until the end of the First World War. The US dollar displaced the pound just as America gained economic superiority over Britain. More than 75% of global transactions have been completed in US dollars since 2008. The dollar also accounts for more than 60% of foreign debt issuance and 59% of global central bank reserves. Although the dollar's grip on all these markets and instruments has been gradually declining in recent years, no other currency comes close to these levels. Last year, Chinese leaders made it clear that they wanted to boost the renminbi's profile as a reserve currency. China's economy and trade flows are large enough to support such a move. However, the country now needs to convince foreign central bankers to start holding the Chinese yuan, the principal unit of the renminbi, in reserve. In July 2022, the People's Bank of China announced a collaboration with 5 nations in the Bank for International Settlements to achieve this. China, along with Indonesia, Malaysia, Hong Kong, Singapore, and Chile would each contribute 15 billion yuan, about $2.2 billion, to the renminbi liquidity arrangement. Meanwhile, the Chinese yuan has already become a de facto reserve currency in Russia. Russian leadership turned to China after facing sanctions from the West due to its invasion of Ukraine. Now, 17% of Russia's foreign reserves are denominated in yuan. The yuan is also the third most demanded currency on the Moscow exchange. As these partnerships become stronger, the yuan's status as a reserve currency could be further entrenched. The rising influence of China's currency yuan has prompted questions about whether it can oust the US dollar as the world's dominant currency. As per a Bloomberg report, the yuan has replaced the US dollar as the most traded currency in Russia. Russia turned to China's currency amid Western sanctions following Moscow's invasion of Ukraine last February. Before Russia's war in Ukraine, the yuan had a negligible trading volume in the Russian market. Western sanctions targeting Russia's financial system pressured the Kremlin and Russian companies to shift their foreign trade payments from the dollar and euro to alternative currencies. Beijing has also provided a market for Russian goods as Western sanctions sting Moscow. The trade relations between Russia and China have grown after the Ukraine war. Trade between the two nations touched a record $190 billion last year, with most of these transactions in Chinese and Russian currencies. reported Al Jazeera. Though the US dollar continues to lead the global trade market, countries have started using other alternative currencies for foreign trade and settlement. China has expressed interest in setting up the Asian Monetary Fund to reduce reliance on the US dollar, and the International Monetary Fund (IMF). Malaysian Prime Minister Datuk Seri Anwar Ibrahim said in Parliament there is no reason for Malaysia to continue depending on the dollar. The Malaysian leader also stated that the country's central bank is chalking out plans to negotiate trade matters using the ringgit, Malaysia's currency, and yuan. It's not just Malaysia that wants to ditch the US dollar to water down America's influence over the world economy. Reuters reported on the 31st of March that the yuan has emerged as the second most important currency in Brazilian foreign reserves, surpassing the euro. The Chinese currency, which did not have a share in Brazil's foreign reserves till 2018, accounted for 5.37% of Brazilian central bank holdings by the end of 2022. However, the US dollar still commanded Brazil's total foreign reserves last year, with an 80.42% share. Earlier in March, Saudi Arabia said it is open to talks to sell its oil in currencies other than the dollar. As per the Wall Street Journal report, the oil-rich nation is also in discussions with China to accept yuan for some of its oil sales. Last July, Iran said it has completely abandoned the US dollar for its trade with Russia and would adopt the Russian ruble for transactions. It also announced it has similar plans for trade with India, Turkey, and China, Indonesia, Malaysia, Hong Kong, Singapore, and Chile decided to contribute 15 billion yuan, around $2.2 billion, to the renminbi liquidity arrangement in July 2022. Beijing has also been promoting local currency and trade settlement and finance through the BRICS collective, consisting of Brazil, Russia, India, China, and South Africa. China's central bank has approved 31 yuan clearing banks in 29 countries or regions. In recent years, China has reported double-digit growth in yuan-denominated trade settlement and investment, as per South China Morning Post (SCMP). As per China's Ministry of Commerce, commodity trade worth around 7.92 trillion yuan ($1.15 trillion) was settled in yuan in 2022, a surge of 37.3% from a year before. Yuan is becoming popular among countries for trade settlement. The study also said the Chinese currency could become an alternative to the US dollar in a multipolar world, and this parity with the greenback could happen in a few decades. China has already helped launch the Asian Infrastructure Investment Bank (KIIB) as an alternative to the World Bank within the Asian region. If it can indeed tackle the influence of the World Bank and IMF within the region, it might be possible for the yuan to become competitive against the US dollar in the long run. However, certain obstacles can hamper the yuan's growth in toppling the US dollar as the world's reserve currency, including its strict currency controls. The lack of transparency in the economic policy of China and Russia can also spook countries to adopt them against the US dollar for foreign trade. When it comes to the Russian ruble or the renminbi yuan, you cannot rely on the transparency of Vladimir Putin or Xi Jinping. Since the decision-making process in these countries is rather undemocratic, it is difficult for traders to rely on these currencies as reliable alternatives. Last year, Chinese leaders made it clear that they wanted to boost the renminbi's profile as a reserve currency. China's economy and trade flows are large enough to support such a move. However, the country now needs to convince foreign central bankers to start holding the Chinese yuan, the principal unit of the renminbi, in reserve. In July 2022, the People's Bank of China announced a collaboration with 5 nations in the Bank for International Settlements to achieve this. China, along with Indonesia, Malaysia, Hong Kong, Singapore, and Chile would each contribute 15 billion yuan, about $2.2 billion, to the renminbi liquidity arrangement. Economists including Barry Eichengreen of the University of California, Berkeley, and Camille Macaire of France's central bank published a paper analyzing the yuan's potential as a reserve currency. The researchers argue that replacing the dollar isn't going to be easy or quick. However, they found evidence that yuan reserves were steadily increasing in countries that had tighter trade relations with China. This growing influence could make the yuan an alternative to the US dollar in a multipolar world. In other words, China might chip away at the dollar's influence over time. The renminbi's current position was similar to the US dollar in the 1950s. Based on that comment, it could be just a few decades before the yuan gains parity. If the forecasts are correct, long-term investors should consider some exposure to yuan-denominated assets and Chinese stocks with significant yuan earnings. I'll be interested to know your thoughts. Anyway, thanks for watching. If you did like this episode, I got a whole bunch of stuff on finance, science, business, and technology. Subscribe to this channel if you have not yet, and share this video with your loved ones so that they can get all the relative information regarding the popularity of the Chinese currency currently. I'll catch you again soon for the next episode.